Well, unfortunately, this year, March isn't all about basketball. There's a lot of madness going on in the market as well. So stick with me as we get into the details. My name is Bryan Cannon, and welcome to Markets in 5. So before I jump into the stock market, if I'm talking about the madness of March, I think one of the things that has to be addressed in this video is the bank failures, the run on the banks. So, Silicon Valley Bank followed by Signature Bank in New York, and then Credit Suisse overseas. Hopefully that contagion has been kind of contained. But if not, that's something seriously that we need to keep our eye on and make sure that it doesn't really become a problem. But you can see by this chart, and I just find this chart completely fascinating. So all of that work they've done with the quantitative tightening over the last year of raising rates and trying to tackle inflation, essentially half of it got unwound in 1 week, trying to stop the contagion of the bank run. So shoring up the banks, shoring up the financial system, shoring up the FDIC, which goes to bail out some of these banks, all was reversed. All of that was done in 1 week and reversed an entire year of quantitative tightening. So, March Madness, good gracious. So we've got to just really watch this. So as a quick recap, the market is obviously trended down. This year in January broke up, February broke way down, and then March has just been bouncing around this line. On the off weeks of Markets in 5, we post a stock market update to our blog on our website, so just go there to visit that. And the last one was entitled Walk the Line, so kind of throwback to Johnny Cash. But, the point is that the market is just walking this line right here, and in doing so, it feels like prison. We really want to see a solid breakout either to the upside or get some confirmation that this thing is really just kind of falling back apart. And, we'll continue to monitor that risk. And, we've got a lot of cash right now. So we're waiting for this to either give us a solid signal to break out or if it breaks down, we may raise more cash. So this is a close-up of that same chart, and you can kind of see where the, it's really just kind of popped up. So we've got, there's long-term trends, there's medium-term trends, and then there's short-term trends. The market is fractal, meaning that all of the trends kind of work in tangent together. And so, you can't just pay attention to one trend without looking at the other and without looking at the other. So, eventually they all work together, and sometimes they don't, but eventually they will, if that makes sense. So the long-term trend is down, the medium-term trend is down, and the short-term trend is up. And so we want to see, does the short-term kind of break up? And if so, we imagine it would come up to this area and have a little bit of resistance to fight. And but if it brings it down, then it would cross back down below this line, and then it would break below this kind of this midterm trend, and then have some serious resistance down here. Obviously, if it didn't make it, that would be bad. If it was able to get through this, that would be very good. So we're just still in that waiting zone to figure out, is this a fake breakout or not? Did the market kind of go up and eventually break down, or is this a breakout that's testing the line and eventually takes off? So again, either way, we're going to be prepared. But that's what we're seeing right now. It's just a whole lot of nothing. All right, the last chart here that kind of fits into the March Madness theme is the yield curve inversion. So again, I've kind of talked about the fact that when the Fed is tightening and the balance sheet is being reduced, that generally goes to, because they're trying to fight inflation. But when you start to see that rise back up, the reason it rises back up is because the market's starting to tip over a little bit, and the Fed, sees the need to pump more money back into the system. And so, generally speaking, when you see the Fed lowering the rates or increasing their balance sheet, you see the market really start to take off. And they're doing this as an effort to fight that pretty much what could be seen as the market on the edge of a cliff. And so this is something that we're watching very closely. So it's been in a complete downtrend until they pump that money back into the system. So again, if they continue to do that, then it's because this market's dropping. So we're watching this very, very closely. So in wrapping up, you can see that we're kind of just still hugging that line of bouncing between resistance and support. I think at some point, probably sooner than later, the market will make up its mind. Some sort of event will happen that will either shoot this market up or rip it down. And either way, we're going to be prepared for you. But, if you have any questions, give me a shout, and I'll plan to see you in the next Markets in 5.